Hi everyone, it's Evan here from the Trade Risk on Thursday, February 16th. We're intraday right now, and I just wanted to bring your attention to a couple of things that I'm looking at. Talk about the S&P 500, IWM. Probably leave it there, maybe look at one other market. This will be brief. So we're seeing a little bit of weakness creep into the market, and that's pretty laughable because it's only less than 1/4% that we're currently down here in the S&P 500, but it will, if it stands, be good enough to snap the 7-day winning streak that we've seen. No damage at all, right? Retracing just half of yesterday's gains, still well above the 8 period, still well above the 20 period. What is more interesting to me is the IWM, the small cap index. This is seeing a little bit larger of a give back. We're actually down almost 0.75%. That's more than yesterday's gains. You can see we were up just 60 basis points yesterday. We're down 70 basis points. So we're erasing yesterday's gains and coming back to this 138 area. Now, what's important to me here is sort of twofold. The Russell 2000 the small caps have been the underperformers so far year to date. They're up less than 3% on the year. S&P 500's up 5.25%. The Nasdaq, I think, is up 9 or 10% or 8%, somewhere around there. So on a relative basis, we've seen the small caps underperform. Now, what was encouraging was the breakout here from the small caps. We talked about this in yesterday's video, but this is sort of the wild card in the bull's back pocket, is if the IWM can suddenly emerge from this 12-week consolidation period and start to leg higher, that would provide great fuel and great energy for the market to sort of continue to move higher. The give back today, while still not really doing any damage, we're still above 138, we're still above these fast moving averages. It's something to pay attention to, because if we started to lose this area down here, that could certainly derail or let some steam out of this market, out of the overall market, if we fall back into this old range here. So I'm paying attention to this. The S&P 500, again, still in a very strong position of strength. So is the Nasdaq, so is the Dow, but the IWM is something that I want to pay close attention to here over the next few days, because that's going to be the most actionable. Now, if you believe in this rally, if you want to be long here and you want to take advantage of these dips, buying support down here on a retest, that's completely reasonable. And then ultimately back above 139.50, if we can start to get moving to the upside, then you'll certainly be in good shape. Overall, I don't want to be fighting this market hard at all. The S&P 500, again, in a very strong position here. If we start to continue to pull back or at least digest or weaken up, you should be building those watch lists of stocks that you want to get involved in, waiting for names to set back up. That's mostly what I've been doing today, is just getting that list ready. If we can start to pull back even just 1%, 2% in the S&P 500, I think that would be great to set up some new entries for the intermediate term. And again, on a tactical level in the short term, paying attention to this IWM. So hope that helps. As always, thank you guys so much for watching, and I will talk to you again soon.